Good morning here. It's Thursday the 14th. Brett with Directors. Hey, today just putting out a note to all of our folks in the database, kind of our monthly update as to what's going on in the marketplace and a couple of key updates. So, first off, always like to talk on rates a little bit. So, the last few months here, really the start of this year, been some ups and downs. It's been a relatively tight range, maybe a 0.25% or so in interest rate, up and down. And really what's going on in the marketplace is we'll see one or two economic reports that come out, whether it's inflation, job data, things of that sort, and that maybe be a little bit slower, showing that inflation's coming down, the market rallies down a little bit. Then vice versa, the next week we might have a report like we did today, showing the data just a little bit higher and things bounce back up. So again, it's been a relatively tight range, but so much of the focus is coming into, okay, when we see a report down somewhat or showing slowing, the market's quick to jump, okay, the Feds might be lowering their rates soon and things are going to rally downwards. Vice versa, when we see something a little bit up, the market goes, okay, hey, now the Feds might be waiting a little bit longer to lower rates. Therefore, things might be a little bit further out. So quite honestly, there's always a ton of speculation in the marketplace, just like a stock market would be, very much the same for interest rates. So overall, still significantly lower than the peak back in October, but at this point, kind of a little bit of a stuck range as we wait for data to come down and for the Feds to officially start lowering rates. I think at this point, it's very likely it's the back half of the year, sometime July, maybe August. But remember, we have the election. That's going to add somewhat of political pressure to see these rates come down. So still very optimistic to see rates move. Overall, 100% needs to. It just may be when is that going to happen and potentially starting in the back half of the year. So that's kind of a little recap on rates. Next, the market itself. So the market has definitely picked up. Inventory a little bit, but buyer appetite significantly. So we're back into a position where things are multiple offers. Now, on one hand, as a buyer, we don't love that, of course, but we also got to remember it's a good thing that there's appetite out there, meaning once we get a property, that really helps to drive appreciation up. In the long run, one of the biggest reasons we buy real estate is to gain the equity. So it's a bummer sometimes when we're facing those multiple offers up front, but in general, that's a good thing for our marketplace to show the strength in it and the demand for real estate, which will push values up over time, gaining us a lot of appreciation as owners. That being said, we have some good tactics, to say, okay, if we are going to make an offer, how do we put the absolute best foot forward? So again, if we're in that position, don't be worried about the market. Things will come together eventually for us. And if we strategically approach it, there's some really good ways to make your offer stand out from the crowd. And we've had some great success there. So a couple of other small updates. I did want to send out a quick reminder. At the moment, I'm licensed in 6 states. So we're lending in Washington, Oregon, Idaho, California, Arizona, and Montana, last one there. So if you know of anybody that's looking to lend or need refinance help, purchase help, or potentially moving from one state to the other, we can do some of our fun bridge loans, but we are in those 6 states, happy to lend. And I think finally, guys, we do a lot of specialty loans. I know I've talked on this quite a bit, but anything from a bridge loan, a transition loan, non-traditional income loans such as bank statement loans or P&L only loans. So if you or you know of somebody that doesn't think they may qualify, I really encourage you to reach out. There's so many folks that don't think they qualify for one reason or not, and we can put together an awesome plan. In a very, very worst case, we can just talk over a strategy as to, hey, what things could we do to get you there? But it bums me out to think about how many folks maybe could get a mortgage or restructure debt in some sense, but don't think they can. So feel free to reach out. Hey, other than that, guys, thank you so much again for being our past clients, our pre-approved clients, our agent partners. We really, truly appreciate you. And thank you for all you do for our business. Take care here and look forward to catching up next month. Bye.